What if I told you that the same government publicly telling you that crypto is dangerous, that it is used by criminals, that it needs to be controlled, was simultaneously and secretly doing everything in its power to make sure it was the one holding the most of it? What if the entire story you were told about crypto regulation was not about protecting you, but about controlling who gets access and who gets shut out until the biggest players could get positioned first? This is not a conspiracy theory. Every single thing I am about to tell you is documented, published, on the congressional record, or signed by a sitting president of the United States. And most people watching this video had no idea any of it happened. Let us start with the thing that shocked me the most when I put this picture together. The United States federal government is currently the largest known state holder of Bitcoin in the world. As of February 2026, the government holds approximately 328,372 Bitcoin, not through some forward-looking investment strategy, through years of seizing it from people it prosecuted. Silk Road, Bitfinex hack, dark web marketplaces. Case by case, the government accumulated one of the most valuable Bitcoin treasuries on Earth while publicly maintaining that Bitcoin was primarily used by criminals and should be viewed with skepticism. And then, on March 6th of 2025, President Trump signed an executive order establishing the United States Strategic Bitcoin Reserve, making those seized assets a permanent reserve asset of the federal government. The same week, Trump announced the reserve would also include Solana, Cardano, XRP, Ethereum, and Bitcoin in what he called a digital asset stockpile. He stated his goal was to make the United States the crypto capital of the world. Let that land. Years of publicly skeptical rhetoric, years of regulatory pressure designed to suppress the industry, and quietly, beneath all of it, the government was accumulating 328,000 Bitcoin. It is not the first time a government has done this. It's the same playbook used with gold before and after the gold standard, where policy shaped who owned what before the rules changed. The difference is that this time the receipts are on the blockchain. But the Bitcoin reserve is only the first layer of what is happening. The second layer is even more revealing because it involves what the government does not want to be the dominant form of digital money. There is a bill called the Anti-CBDC Surveillance State Act. It passed the House of Representatives on July 17th of 2025. A central bank digital currency, a CBDC, would be a digital dollar issued directly by the Federal Reserve. Every transaction visible to the government, every payment trackable, every account freezable. Think about what that means for a moment. A government that could see every coffee you buy, every political donation you make, every gun store purchase, every church contribution, every transaction that reveals something about your beliefs, your behavior, or your associations, accessible to bureaucrats without a warrant, without due process, without any of the legal protections that currently exist around physical cash. The White House executive order signed in January of 2025 explicitly described CBDCs as threats to financial system stability, individual privacy, and the sovereignty of the United States. It ordered all federal agencies to immediately halt and terminate any plans or initiatives related to creating a digital dollar. In plain language, the sitting U.S. government banned itself from building a surveillance currency. Then, in March of 2026, the U.S. Senate voted 84-6 to ban the Federal Reserve from issuing or facilitating a retail digital dollar until December 31st of 2030. 84-6. That is not a partisan vote. That is one of the most lopsided Senate votes you will ever see on any financial legislation. 84 senators looked at the concept of a government-controlled, programmable digital currency and said no, not yet, not without explicit congressional authorization that does not currently exist. The language is deliberately airtight. Direct issuance of a CBDC blocked. Indirect issuance through banks blocked. Creating something that functions like a CBDC under a different name blocked. The one exception carved out is private, open, permissionless, dollar-denominated currencies that fully preserve the privacy protections of physical cash. In plain English, Bitcoin-style open networks are explicitly permitted. A government surveillance currency is explicitly prohibited. Now, here's what makes this truly fascinating from a strategic standpoint. 134 countries accounting for 98% of global GDP are actively researching, piloting, or launching CBDCs. China has had 2.25 billion digital wallets running on its digital yuan. The European Central Bank is in a 2-year preparation phase for a digital euro. The Bank of England is exploring a digital pound. And the United States is going in the exact opposite direction, not because it doesn't understand the technology, but because it has made a calculated strategic choice. Rather than build a government-controlled digital dollar that hands the surveillance problem to federal bureaucrats, the U.S. is betting on private, regulated stablecoins to maintain dollar dominance in digital payments without the political and civil liberties liabilities of a state-run wallet. That bet is embodied in the Genius Act, which was signed into law on July 18th of 2025, the first major federal crypto legislation in U.S. history. Under the Genius Act, private stablecoin issuers operate under federal oversight, maintain one-to-one reserve backing, and submit to monthly audits. The dollar stays dominant, the surveillance capability stays out of government hands, and the private sector builds the infrastructure. But now we have to talk about the part of this story that the government has never voluntarily told you. Because understanding what happened in the years before this policy reversal explains everything about why prices were suppressed, why certain companies couldn't get bank accounts, and why the space felt like it was being strangled rather than regulated. In December of 2025, the Republican-led House Financial Services Committee released a 51-page documented report on what the crypto industry has been calling Operation Choke Point 2.0. Here's what it found. Between 2022 and 2024, federal regulators, including the Federal Deposit Insurance Corporation, the Federal Reserve, and the Office of the Comptroller of the Currency, used informal supervisory tools to systematically cut crypto companies off the banking system. Not through legislation, not through formal rulemaking that requires public notice and comment, through internal letters, informal guidance documents, and supervisory pressure that gave banks 24 to 72 hours notice, or sometimes no notice at all, before shutting down accounts for companies operating entirely within the law. The FDIC sent what the report calls pause letters to approximately 24 banks. These letters instructed the banks to delay or halt all crypto-related services while demanding extensive documentation with no clear process for resolution. The Federal Reserve required banks to get non-objection letters before engaging in any digital asset activity, effectively creating a permission requirement that had no formal statutory basis. At least 30 entities and individuals in the digital asset space lost banking access as a direct result of this informal pressure campaign. Not 30 bad actors, not 30 fraud cases, 30 lawful businesses operating in a legal industry that regulators decided to squeeze through the back door because they couldn't do it through the front.
The companies affected were not obscure projects. Coinbase, the largest publicly traded U.S. crypto exchange. Marathon Digital Holdings, a publicly traded Bitcoin miner. The founders of Uniswap, Ripple, and Gemini all personally lost banking access. Anchorage Digital, an institutional crypto platform with a federal charter, laid off 20% of its workforce after losing bank relationships in 2023. The House Financial Services Committee report placed this squarely in the congressional record. The Biden administration sought in the committee's documented words to make it nearly impossible to engage in digital asset-related activities. It utilized a regulatory regime that provided too little certainty to financial institutions and gave too much discretion to the regulators overseeing them. And now for the part that should sit with every retail holder who was buying crypto during this period. While that regulatory chokehold was being applied to the industry, while companies were being debanked without due process, while regulatory uncertainty was suppressing prices and institutional participation, large sophisticated players with legal and compliance resources were still able to navigate the environment. Retail holders absorbed the price suppression, institutions with the resources to work around it were positioning. Every cycle in financial history has a period where the rules are unclear, the barriers are high, and the people who understand what is coming accumulate before the rules change. In crypto, that period was 2022 through 2024. The people who accumulated through the pain of that regulatory chokehold, through the bear market, through the Operation Choke Point 2.0 debanking campaign, are the ones sitting on the largest positions today. Now understand what has changed and why this moment in 2026 is fundamentally different from any previous moment in this industry's history. The Genius Act is signed. Stablecoins have federal legal status for the first time ever. The Strategic Bitcoin Reserve is established. The U.S. government officially holds Bitcoin as a reserve asset. The Anti-CBDC Surveillance State Act passed the House, and the Senate voted 84-6 to keep the government out of programmable surveillance money. Operation Choke Point 2.0 has been formally reversed. The FDIC pause letters, the Federal Reserve non-objection requirements, the SEC Staff Accounting Bulletin 121 that made Bitcoin custody on bank balance sheets prohibitively expensive, all of it has been rescinded or reversed. The Clarity Act is working through the final Senate steps that would convert regulatory guidance into permanent statutory law. The infrastructure that was being quietly dismantled in the shadows is now openly being rebuilt in public, and the same government that spent years telling you crypto was dangerous is simultaneously holding 328,000 Bitcoin as a national reserve asset, banning the surveillance digital dollar that would have given it total visibility into every transaction you make, and passing laws to ensure the private crypto ecosystem it tried to suppress becomes the dominant payment infrastructure for the next generation of global finance. The question is not whether governments understand crypto, they clearly do. The question is whether you understand what they are doing with that understanding, and why the timing of everything happening right now is not accidental. The Clarity Act markup is scheduled for late April. The Parity Act, with its staking deferral and stablecoin tax exemptions, is moving with bipartisan support. The regulatory environment that choked this industry for 3 years has been formally reversed, and the Fear and Greed Index is sitting at 13, meaning the majority of retail investors are as scared right now as they have been at any point since the FTX collapse. That is the government playbook in every asset class in history. Accumulate during suppression, build the framework, open the gates, and let the price discovery happen after the positioning is complete. You are watching it happen in real time. The only question is which side of that timeline you are on. If this video gave you a picture that no mainstream source was going to paint for you, hit the like button right now. It is genuinely how this kind of content reaches the people who need it before the second half of this story plays out. Subscribe if you want every major policy development, every regulatory shift, and every government move in this space broken down the moment it matters, because the rules of this game are changing faster than most people can track, and the people paying attention are going to be positioned very differently from the ones who were not. Here's your comment question. Knowing everything in this video, do you think the US government's current pro-crypto stance is genuine long-term policy or short-term strategic positioning? Drop your take below because that debate is worth having. And if you know someone who still thinks crypto is something the government wants to kill, send them this video today, because the evidence says something very different. Stay informed, stay skeptical, stay ahead.